When Japan raises rates and other countries do too, do we lose? No, because people are going to chase yield, and they want to do that in a safe way, especially if risk-on assets are moving down. So if you have a huge move down in stocks, people are going to be scared to invest their money there, and they're going to be looking for safe haven stuff. They're going to run to treasuries and other things that are going up at that time. I think XRP will be going up at that time. And so, and there'll be, if you're able to park your money and earn 5, 6, 7% in a bond, people are happy to do that. People are happy to park their money in a savings account or a bond or CD and make 5, 6, 7, 8% on it. It's when it's lower than that that people really don't want to do it, because it's not worth locking up your money for that little of a return, especially when you can put it in stocks or some other vehicle and generate, a greater return, even if there's a little more risk. And so people weigh that out, right? So as bond yields rise and interest rates rise, you'll see people move to risk off, and more people rotate into bonds, which will stabilize the bond market, which will be good. But multiple countries raising their interest rates just exacerbates that. It's a flight to safety. And they need to do that to be able to offset the inflation in their economies that we're currently seeing from energy costs alongside the amount of money that's sloshing around. And they'll have to raise interest rates probably even more when the velocity of money picks up. So until they lower the M2 money supply that's out there. So there's two things that cause inflation in an economy, and it's an equation, and it's M2 money supply, or how much money is moving around the economy, and the velocity of that money. So how fast money is exchanging hands between people. When they move on to blockchain, the velocity of money is going to pick up substantially. And so they would be able to maintain higher interest rates with the velocity of money moving faster through the economy, which is good for everybody, really, because then you're able to park your money at a bank or at a bond or something safe and earn 5 to 8, 10% on your money very safely. People like to do that. The only time that they're not willing to do that is when treasury rates are like zero, and then everybody rolls their money into the stock market, because that's the only place you can get any return, right? But if you have a stable economy, you should be able to maintain 5 or 6% interest rates pretty easily if you have real economic growth and GDP is going up.